Okay, so for me, myself, my name is Pramod Kumar. I am a CFA charter holder and FRM certified. These are the financial certificate, and I also run my blog on riskriseanalytics.ca, which is mentioned here. Okay, the purpose is the video again to for the education and not to influence or make anybody change any opinion. Okay, so and this is very you see this is the agenda I'm trying to cover here. So like I'll start from the top exchanges of the year 2019. So basically start from very what are the top exchange, or you can say the markets, and what are the say indices, introduction or indexes, different people say different, and what are the different categories. So I'll take in this one two example, the emerging market India and the US market, who is the very well developed market. So what are the different indexes there, different categories, and then how as a common people who is working as a full-time or any other kind of a job who's not in the financial market, what are the different exposure or the basic tools, investment tools they got it. So here I list three options. For example, mutual funds, which is very common. I believe if you go to the bank and whenever you ask for the investment, the first thing say, okay, go and invest in mutual fund. But maybe you have some exposure, but I'll give some the pros and cons of mutual fund and ETFs. The second one, electronic trading funds, and the stocks, right, which is the shares. And then I'll show you some example on the price returns. Okay, what are the price returns if you invest on certain indices, or take some example of stocks, and then we'll go and to one of the website and try to read the share price or the PE and try to see, okay, for the different companies. Okay, so that's the very general guidelines. So this is what we cover, and I'll go on the as a normal speed, but if you want you can always increase the speed. I'm going to post on YouTube, it has an option depend so because the target here is for the common person who doesn't have those exposure, or maybe certain topics if you already know or want to skip, so you can just make this video a little bit fast forward, but I'll suggest go, if you are new, go on the same pace. Okay, so let's first thing first. Okay, thanks for selecting this video and coming to uh, giving the time to watch this video. So let's go to the first topic, which is the top exchanges. Okay, so what are the top exchanges or in 2019? Can you make a guess? So for sure, the one easy guess is the US market, right, which is the top one. So I here list some of the top exchanges, and then I also source that this is I got from Wikipedia. Wikipedia is a very good source of information. Okay, there are a lot of numbers there, but I just select few of them which you might hear. So first one is like a New York, in the marketplace is New York City. This exchange name is New York Stock Exchange, and this is 22,923 billion of the market cap. So this, and how many in the US dollar. So all these terms are in US dollars. So you see these many, the volume or the market cap of the securities are traded in this, and the number of trade volume is 1452 US dollar in billions. The next bigger one is the London Stock Exchange, which is also the very big. You can see how in terms of what's the in terms of the money wise, right? If you combine all the securities in that exchange, what's the market cap coming? So what's the dollar amount that coming? So think from that layman languages. So you see the second one is a London Stock Exchange, but it's how much low is it? Almost like 5 times lower than if you can say the New York Stock Exchange. So that's the power of the US market. And the number of trade volume there is, how many transaction or trading happen on is 219. The third one is Hong Kong Stock Exchange. This is also pretty close to the London, 4,000 to 4,026. And I'm surprised that even the Bombay Stock Exchange, which is the Indian emerging market, so the 2,056 US dollar market cap is there. So that much, the dollar amount, that much investment is going towards India, and that much company is worth there in that in the stock exchange market, right? And for sure, the Toronto is TMX group is in downtown Toronto, and here is 2095 and only in the 97. So trading volume is not that great as compared to, but all other, but it's pretty close. And if I believe if so, this is, you see how much is the volume of the market, how big is the market here, right? Okay, so let's go to the another one is the indices. Okay, so what is indices? You see so many in the news like S&P 500 and other. So indices are is nothing but you can think of as a basket of securities, right? Or securities can be stock or right, so or the bond. These are the which can be traded. So think from that perspective. So the different dimension in, for example, if you go to the supermarket, right, you'll buy let's say fruits, apple or oranges. You also buy some vegetable. Meat eaters will buy, let's say, the meat and eggs, milk. So these are the combination, right? So think from that perspective. If it's a like a similar, so that's how that's a basket of let's say fruit and vegetable, right? Similarly, the indices is nothing but it contains a lot of different securities, right? It can be, for example, uh, on the equity wise as well, like it can be on the asset class, equities, fixed income, which is like a bonds, or the commodities, right, which is the copper, silver, or other metals, right, grain, like livestock, different, right? So they have their own indexes as well. So or it's a broad market index, for example, like a broad market index, for example, Russell 3000 or Wilshire, right? So these are the index. So this is the Russell. This means 3000 number of securities are in that index, right? So it's try to cover the broad opinion of the market, right? Okay, what is market? And Wilshire is 5000, but it's initial, but now Wilshire even might have more securities. So it's just the number is just for the name. Similarly, it can be on the sector specific as well. Okay, so I think let's take some example, right? So let's go to the uh, Indian market maybe first, and then I'll show you. So this is the NSE Nifty indices at the home page, and then this, if you go here and click on the indices, you see there are different categories of indexes, right? So in the equity section, which is the security, we have a broad base index, right, where we have Nifty 50 or Nifty 100. So let's click any one of those, right? So if I click here, let's say Nifty 50, right? So if I'll cover a few, and if I can also put this link in the descriptions, so it's easy for you to understand, right? So now think from that basket concept, right? If you get that, it's easy, right? And these are, so you see the Nifty is what I say is a well divides 50 stocks. So 50 means it has 50 stocks index, and it represent important sector of the economy, right? So it's an important sector, so it has some 50 stocks within it, right? And the base value of the index, okay, and then it has some other information. So let's say what makes, so the sector contribution says this, so this looks like a little bit of broad. So it says a sector, so it has some financial sector, is a IT sector. So this 14% means, so all index should be 100%, right? Let's say it's 100%. So what this Nifty, so maybe 36% of the company in the Nifty 500 is coming from the financial sector, right? And then it's IT is only 14%, and then oil and gas is 13%. That's what it's trying to say there. Consumer goods, right? consumer goods, and the metals and all. So this looks like a broad-based index to me as well. Okay, and then you can also download here the index constituents. What are the, let's say I never tried that one, what it comes. Okay, if I, okay, okay, oh, interesting. So this is even better, right? So such a open information is available. So you see here, so this is the 51, but actually what first one is the header, right? So in this one, you'll see all those company names, which makes the Nifty 50 index, right? So these makes Nifty index. So these are the industry, these are its, I assume this is the symbol. Yeah, this is the symbol, maybe the ticker names, and this is the ISIN code. ISIN code is think from as like a number representing this company stock. Okay, so if how, let me show you one. So if I pivot this one, I was not planning initially to do this, but since they provide this good information, so I'll try to match how they come up with this one. So let's say this is the industry, and then ISIN code. Okay, right? So okay, so this is what it's trying to say. So these are the sectors here, right? So when you say the financial sector is only 9 companies, right? And that's 9 companies make the, that 9, that's makes the, it's pretty interesting. Here is the financial. So this is the, this makes the, this is the companies underneath that, right? And IT sector is only, these are the companies. Okay, so these are the companies. So coming to this weight, right? So this percent of weight, I don't want to go too deep into it. The weights cannot simply by this, okay, these are the number of company and then the weight come. The weight can come from the market cap, or it can come from the price, but I just want to show you here the simple composition, right? If it's the IT sector, if you want to know, oh, this is the index, what are the companies there, right? So these are more like a pretty reputed IT company like Wipro, Tech, Tata, Infosys, right? And another one is HCL, right, which makes in Nifty 50 list. Similarly in the financial sector, right, what makes it, if I double click, oops, here, sorry, these are the financial industry, financial, the banks here, State Bank, Kotak, ACs, Bajaj, interesting, ICIC and all. So this make it, okay. So at least you get some idea, right? So let me don't save this. Okay, so similarly, before I go to it, also to this chart, let's select something other broad-based indexes in the here, right? So it has some next Nifty 100. I believe these are the like top 50, and then they go to top 100, top 200, and then Nifty 500, which is more like maybe like a large cap kind of a S&P 500, I assume. So let's say this, right? Nifty 500 represent the top 500 company. You see this top 500, more like a S&P 500, and in US, and seems like in India they have the top 500 companies. Okay, and then again the good thing here is they provide this data openly, right? And then they have certain methodologies or other, so you can read later on this one. Again, okay, on this one they have a chart. So let's say, so this shows if you 30 minutes, let's say one daily chart. Okay, so this pretty much shows how what's the price. So right now it shows that it's on 8,007 Indian rupees, right, and 80 cents. Okay, so this broad, when you say the broad base, right, it covers all those. Okay, let me show it to you. So yeah, it covers all, right, not only one sector, but it covers all the sector within that within that countries, I believe, right? Okay, so let's go to the another one, right? Okay, go back to indices. Oops. Okay, here. So now the next one you see is a sector base, right? So if you don't want to index on the broad, just on the particular one niche area, right? Let's say only auto sector, right? If you want to invest in the auto or in banking or in IT sector, right? You can select this one. So because you or the pharma or the metals, right? Let's say they also have oil and gas, right? So let's click on the oil and gas, right? Because you think maybe certain sector will perform based on the economy, and then you can pick and choose, okay, how that sector is doing. So it shows difference. Again, if you click on index constituents, let's say, oh, it's only few companies on oil and gas, right? So maybe, yeah, you see this is only one energy, right? So it has Oil India, Reliance, Bharat Petroleum, Indian Oil, and so on, right? So rather than investing in one or other, just this index tracks these auto and oil and gas uh, companies. Okay, so this is now you get it. Okay, what is on the sector wise, right? Bank, financial services, right, and so on. The theme based, again, is all about creating the basket, right? So this basket is on the theme, rather, okay, I only want commodities, or how much in uh, India is consumption. Or again, wow, it's pretty surprising to see that they have even the Tata group. So it seems like Tata is so big that, or you see the ESG right now. ESG is also quite famous. Okay, so ESG is environment, social, and governance, right? So which companies does good on that? So if you want to support that, or they want to track that, so they created the index. So the basket is similarly like you do the groceries. So these Nifty, the indices, they just put based on the different strategy and create those indices. Okay, so I hope you get the idea. Similar, these are seems like these are the Tata group, right? If I click on that, I'm pretty curious what will come here. I'm not surprised that these are all seems like these are all different companies. Maybe it was owned by the Tata, right? Yeah, Nelco, Oriental, blah blah, and also on. Okay, so this one shows that. Okay, so this one I can close this one, and this is not only on the, you can go on other one as well. So these are on the fixed income side, like of bonds, right? You see Nifty G, and corporate bond. Money market is okay. Right now I'm focusing on equity, but you can see this is on the fixed income as well. Fixed incomes is when you say, for example, T-bills is pretty liquid. Corporate, these are the corporations, and these are G-Sec index, the G-Sec indices. I hope these are more like a US Treasury. Yeah, you see, G-Sec is a government bond. So these are more like a little bit secure bonds, right? But I better to read this right in terms. But usually the bonds issued by the government, right, is more secure. Okay, so this is on the emerging market, right? Similarly, on the S&P 500, let's take another example, right? You see, this is the US on the side. Now from the emerging market we go on the broad US side, and US side you'll see here there's so many indexes as well, right? So I go here as the index finder, and you see if I click on the equity asset class, you see this is the famous one, right? The S&P 500. If I want to see, okay, what is in S&P 500, is more like Nifty India 500, right? But this is on the US side, right? It says, okay, these are the constituent, the top, what are the top 10? They didn't provide, I think, all the data, seems like, but they show the top 10, right, which is the stocks in that indices. Like it's come from Microsoft, Apple, Amazon, Facebook. These are the Google, another Berkshire, right, and all the great companies, right, Visas, JP Morgan, right. These are the sectors, right, and these are the sector breakdown again, how this index is composed. Okay. Similarly, if I go to the index finder as well, then we can have another same concept. Like we also have dividend based index, and we can also select either the development market and the global and all different geography we want to go. Let's say I want to, let's say, go to Europe. Do I get anything? Maybe I just remove dividend. Okay, now you see I have your S&P Europe 350, and it's also showing since year these are like pretty much drop, because everywhere is drop. So not only in US, but these having different region wise, sector wise, and the size wise, right. You can get the large cap are mostly, I believe, which are over plus two, I believe it's 2 billion or more. So dollars pretty much heavy in terms of the market cap, or the size of the company, right. Those will come there. And then we have mid cap, and then the small cap, right. Is small. Okay. So let's say if I go here, detail and data, and it shows different, it shows the methodology, the fact sheets, again the constituent different companies there. So we know sometimes we don't have exposure because maybe we don't live in that country, but that's also another good way, right, to look. Okay, okay, this, and we also have a ticker, right, SPEUR, EUR, right. If you go and search, then we can track that. Okay, track that index. Okay, so then this is S&P Global. Seems like this belongs to the all top 100 companies, right, blue chip multinational index. So I believe you got the idea, right. So what is this index and all about? Okay, so let's go to the, okay, okay, now we got this index, and we see how this index can be formed. So unfortunately in this video, right, if you have, it's not live, but if you have any question, I do suggest put in the comments, so I can try to reply to you with my convenience. And but also I'll put these links there, and if you want to play around and read the document, like either India or US, or maybe if you're living in different country, right, try to search it and say, okay, what are these indexes, right. It will give the good examples. Okay, so now the basic investment tools, right. If I want, okay, these are the index, right, index are good, but if I want to invest, right, what are the options available for the common person, right. Okay, the first one for sure, I think most of the people are heard of, is this is the mutual fund, right. Mutual fund, that is, think of this index as a wrapper, right. So this is created by the, it's similar to the index, but created by very professional managers. And then these are well diverse, right. These are diversified. Our government also is very strict regulation on the mutual funds, at least in US and Canada, I can say. But and I believe in other countries it's pretty much should be same. But the main and good thing also about this mutual fund is you don't, you go bank, I believe, and then they can help you to start auto saving in the account. So you can have open end, close end. They have a many broad feature, but the main disadvantage which industry don't like is about the fees, right. And the fees on the mutual fund is quite high, right. So sometimes it's 1%, 2%, and so on. So that's why not many people like it, right. So I'm not sure whether should I create a different video on mutual funds, or but let me give you some overview, right. I don't go into the deep. So let me open the page, right. Oops. Okay, oops, where is it? Just give me a minute. Sorry about that. Let me search and I bring it back here. So this is RBC GAM. So I covered the US market and the Indian market in terms of definition. So let's take some different country for now, right? Okay. So of course I'll take Canada and I'll come here. Okay. So this is the one of the reputed, I just bank, RBC, and there it shows its mutual funds, right? Okay. I'm not here to sell anything, but I just want to show compared to the example, what are the different kinds of mutual fund and fees and all. So, and just one of the tool I find. Okay, if you find any other tool, but I believe that theoretically we are trying to understand here, right, and giving some slowly, layer by layer, to understand that, right? So you see, my understanding is if you go to your own bank and you'll find it, or any other third party website, right, there are different companies and tons who do mutual funds, right? Okay, ask your own bank. And okay, so again, this mutual fund is think from that same idea, right, on the indexes perspective, right? Okay, let's say if I focus on, I think, let's say equity, right, because they have other one as well. So let's say this is okay, then this company, right, this bank RBCs, which is the Royal Bank of Canada, they have a different types of asset class, right? It says okay, this is the equity funds. Equity funds is funds, mutual funds or funds is a nickname, right? And equity means okay, these are the mutual funds on equity. Okay, and this is a Canadian, right? Canadian means this is only compare the Canadian. Maybe if it's India, it says maybe any Indian bank, right? They say Indian equity funds, or Europe have, or UK have something. Okay, and it also says some risk tolerance, right? And if you see some of the fees here, right, this has the management fees and MER fees, right? I don't go into detail, but you sum up into these one, right? So if you get, let's say if you get the equity, any of the funds, which is good, right? There's no problem because it's well diversified, and then it's low price and all. But the fees here is high, right? It's you see 6.6 and point is almost like 1.5%, right? If the funds get, let's say, 7%, you are paying 1.5%, right? And then you'll get a little bit, maybe different funds are different, so some are lower, but this is how they have it, right? So if let's say, you see here is this RBC small cap equity pool, right, for show, and this has 1.25 and 1.49, so almost like a 3%, right? 3.75%. If I go inside, okay, you get okay how this fund performs up to year. You see it shows this chart. It says in 2010, 11, this is the year, and this is the performance in terms of calendar, right? It says up to the right now, it's this year for sure. This year pretty much year, or this is the year to date is 20.75 negatives. You see this performs negative, but in 10-year time, this year is negative, but in 10 year it's earned 10.2%, and since its inception beginning, it's only earned 5.6%. And this doesn't include the fees, which, if I'm not wrong, okay. And you can add some details. I'm not going to any detail, but I just want to understand. This is the fund manager here. Seems like some third party company, and then it shows okay what are the different assets composition is this. So this more like a US equities only. So maybe that's why it's quite expensive. Okay, so okay, and let's take some other example. Okay, so let's say the asset type, fund name. Okay, let's say okay, let's go with the region Canada, country Canada. Okay, let's take this one, right? Dividend fund. I like dividends. Hopefully everybody like. So so who is the fund manager? Fund manager, the people who manages funds, helping track them, if certain securities or certain stocks in that fund doesn't do well, so maybe they're trying to adjust that weight, so ensure that these funds are always follow the similar percentage. And again, this is the dividend funds, and if I say see since beginning is 7.2, which is even better, and the fees is even lower. Not lower actually, it's almost same, right? No, a little bit lower, I believe. From this that was 3%, but giving 5.2 since beginning, and this is lower fees. So the fees doesn't mean that uh, anything, right? So that funds perform better. It's all about what are the different compositions, and it's all about the persons, right? How much risk tolerance it has. Okay, so if you invest 10,000, it shows okay, it goes, and if you keep it, it will be now 36,000, right? So that's how it shows. Okay, so that's it. And you see these are the pretty qualified people, right, who manage this fund: Doug, Raymond, Jonathan, and all. Okay, so he's more like a senior representative. Okay, so I don't want to go too detailed onto this one, and I just want to give some examples, okay, on this one. So you see this pretty, but even the small amount you can invest, and then all. Okay, you can read a little bit, but this is hope a little bit more crystal clear on the mutual fund side. The next is also very common or good now these days, or maybe in few, is ETF, right? ETF is exchange traded funds. They track the index, right? But they are more like indexes, but they track the indices, but they are low cost. Okay, so and the stock features, right? So this mean in mutual fund, for example, so it's also the combination of like a different. It's like a basket. Think from that perspective, but you can trade like a stock. Okay, so it's every day. You can go there anytime. If you have a direct investment accounts in any of the brokerage, you can go yourself buy and sell, right? So and the concept is same behind the scene, right? Most of them just like index, they are tracking the index, and we'll see some examples. Okay, I'll show you some examples, but the good thing is these are the lower cost. Okay, but they are not I believe of very regulated, right? Just like a mutual funds, right? They are not regulated. That's what I think there's a difference. Okay, so my theory is here, right? If you are new to the investment world and you don't have a time, right, and very small amount, I think mutual fund is still good, right? So it's all about different opinion, right? So, but some people say, oh, my friend invest in $100 in, let's say, in some X company, and now the share price goes to, let's say, skyrocket, and they earn a lot. That's very good, right? But what about, right, if that one share price drop, right? It can also be possible. Let's say if you invest, if you're making with the hard-earned money and investing, but if the share price can go down as well, right? And it takes maybe years to recover that. Okay, so from that perspective, right, and if you don't have maybe that kind of a privilege, or still you're not comfortable, right? Many people, even they are very qualified, right? Maybe CAs or CFAs even, right? Maybe they don't want to get exposures to the stocks. They just stick with the ETFs, or sometime even mutual funds, right? So this is all about the personal preferences. Okay, but the idea is just to give you the broad good and bad points, because in the market there are different opinions. But if you have little bit some knowledge, you can Google search it and read some books. At least it will give you some you can make a good judgment out of it. So that's the idea. Okay, so the next one is the stocks. Okay, so stock is pretty easy. These you can go and get the share price. Mostly the stock, when you say people meant, is the common shares. It implies the ownership interest in a company, right? That investors shares in the operating performance of the company. It's quite theoretical, right? So basically what it's trying to say is you are investing in the company growth, right? So if the company goes down, your investment goes down. If the company goes up, your investment goes up. You take ownership in the company. Think from that perspective. May get the dividend. Why? Maybe some company is a great company like Google, Apple, right? Oh, Apple, I think they give some dividend, but Google, for example, they don't give dividend, right? And Netflix and many other companies, right? But you at least you'll participate in the price return, right? Okay, and return can be very good if the company is if you buy the low PE and the company goes skyrocket, rocket, right? And sure, so that's a good thing about that. But your principal, if the amount, if you, let's say you invest in $5,000 or $10,000 or 100, even $100, right? Is it safe? No. You see, in the market, it's crashed. Even the Berkshire, right, which is the Warren Buffett, the company, right? I was reading in the news, its share is drops 40%, right? So it's not safe as compared to if you go to the same thing in mutual fund ETFs is all equity market same, right? It's not the basket. Now from the basket, when we talks about the common share, we're talking about the ingredients of the basket, right? So that's why I'm talking. It's like one company share, one securities in that basket, rather than talking about, so far we have talked about different basket, different type of baskets and all, right? Basket mean indices. Okay, so the common language so you understand. Okay, so let's say some of the examples of the price return. Okay, okay, so this is the S&P 500, right? Which is this is the ticker name GCSPS. If you can search like this, and just giving some idea, right? How much return if you just invest in let's say in this index, right, through some ETF and all. So in 2000, right, is 1389, right? It's around here. It was 1389, and you see after 20 years now, even if the stock price goes down, it is 2826. So I did a math on it. So can you imagine how much is the return from 13 something to 2000 something? It's over 100% for sure, right? Because it was 1000 and right, but in 20 years, so you get your investment doubles if you just go in the broad based, right? Just blindly invest there and don't do any math. I say, okay, I don't care, take some ETF. I'll show you some example, right? Depend upon your country, right? And do nothing. Okay, so you get 100%. So if you have $100 there, then you can have $200, right? And it's not bad. Okay, double of your investment. And this is in US dollar, right? I got this from Yahoo Finance. If you're curious, it's also mentioned there. The next is S&P BSE Sensex, which is in INR. Okay, so this is in INR. So if in INR, if you invest in, let's say, same in 2000, which was that time, I believe the Sensex, it says 3,300 something. I just yeah, it shows here, right? I clicked it, and then now it's 33,717, right? This one. In 20 years in India, it's grown so much. It's 900%. So I think if Indian people, if they have a, they just blindly even invest in their index, right? Don't do anything. You see 900% or 9 times of their money goes so up. So very good return. Okay. So that's the passive. No need to do any daily trading or anything. Just simply, there may be some downturns as well. You see it comes down a little bit, but you see, wow, look at the spike, right? It goes. So if somebody who's in 20 years and now 40 years can easily retire, right? If they have a good amount of or money to invest there. Third one is Amazon, right? The world top company, I think one of the top company, if not mistaken. If somebody did a good selection, right? Can you, the stock was in 2000 around $62, only 62. Now even it's 2,287, right? This one, I did this few days ago. In 20 years time, again the same period of times, 3,578%. Can you imagine it? I don't own Amazon, and I'm not pitching it, but let's be so right. But think from that perspective, right? These are the company, right? If you try to identify early with some, and I don't think so it was too hard, but people who miss the train, and now it's gone so much, 3,578. Okay, so these I gave you the index example, and this is the ETF. Remember, there's a basket. So this ETF is SPY, right? How about I show you in real this one? let me go there, right? So let me bring, okay, this is SPY. Sorry, just give me an example. Okay, so this is the SPY. So this is the SPY. This is the ETF which tracks the S&P 500 index. Okay, so that's what it is, and this is in US dollars, right? So the normal people can afford that. So it's 282 going right now. Okay, so it's pretty same. Okay, so you see, oops, what happened? Seems like my Explorer crashed. Okay, I don't know what happened. Okay, so you see I'm on the Yahoo Finance, hopefully, and you can see that. And then this is the S&P ETF, and I was showing that. Okay, maybe I'll close all other tabs. Okay, so here you see this is ETF. It's just trade like any other stocks. If I want to go Amazon, and right, you see, select enter here. You can select any website. This is pretty free, so it's good. And go to the chart. It's the same place I got the chart, right? So you see, this is all shows in number of years. Okay. Okay. So since I'm here, right? So let's read some basic features, right? Which is the part of the topic. Read basic feature of the stocks. Oops. Just a minute. Okay, so if I come to, let's say, okay, let's read this one. I was not, okay, so Amazon is, okay, so what's this? So if you go on any website, right, I'm here, but usually all the websites are same. So it has the stock price, right? So this is saying this is a one share price, a common stock or share, right? It says 2,286. Okay, so, and then it says, okay, what is the bid? What is the high for that range, right? So this is the highest, lowest and highest. This is a 52-week, 1 year high and low. So these are all the good points, right? And this is how much the total company in the market worth, right? The market cap, $1.14 trillion, you see. And how much this one share is earning. If you buy one share, earning per share, right? Is the company net income, right? Or the earnings of one share is only almost $21, right? And my God, and look at the PE, right? So PE is $109. So it's very expensive right now. I'm not sure why it's so up. Okay. So the PE is, so what PE is? PE is the price over earning. So let me show it to you. Okay. So this is my price. 2286.04. Okay. And this is EPS, earning per share, right? Which is 20.94. Okay. So when somebody says P over E, right? So they are saying, this is a price divided by earning. So you see, this is 109.19, 109 some few cents here and there. So you see it's close. So 109 times. So this means 109 times of its earning the price is trading, which is way too high, right? Usually 20, 25, depend upon the sector, right? It's not specific. If it's the IT sector, maybe a little bit higher, different sector is lower, depend upon the sector is lower, right? So let's take some another example, right? Royal Bank. Okay, let's say the Royal Bank of Canada. You see, is PE is only 9 point. Okay, wow, this is steel, right? This is only 9.55, so less. Okay. Beta, okay, beta is usually, so now you might think, okay, what is beta? Beta is a riskiness of the company, right? How much, or think from this perspective, how much is linked variability in terms of the stock price. So if the index S&P 500, let's say, is 1, the beta of 1, then this is 0.85 from that perspective. If it goes 100% up and down, so this is less. So the lower the beta, this means it's less influenced by the market factors. It has influence by its own factors. It's more on the riskiness. So usually the beta is lower is better because it's less risky. Think from that perspective. I'll show you the one other ticker is Walmart. Okay, so Walmart stock price is a very big company. You see 122 is 348.31. If you have that much money, you can go there and pay $348 and own the Walmart, right? So that's, and its P is you see 23, but it look at the beta, right? For 5-year monthly, it's only 0.28. It's very less risky, and its earning is $5. So for one share, you'll get $5.19 of it. Okay, so that's how you read it. And usually on other, they have other information like stats, right? Here you have some financial information, history on all. You can select this tab, analyst, what analysts think about it. Okay, so maybe I'll prepare. I don't want to bombard this video with a lot of content which confuses you. So I suggest go on the website, try different things, try to go read it, and then work. If you have any particular question, please do comment. Oh yeah, and one important thing is, if you like it and you think it's worth it, then please do share with others as well, because if you share, then we have more knowledge spread around, right? And more people will get benefit out of it. And don't forget to like and subscribe to my YouTube account. And in future, I'm going to put more common kind of a video, right, on the stock appraisal and all. Just based on my views, right? And any other topic as I suggest, if you want me to cover, please do put it, and I'll do my best to cover that as well. So thanks for now, and I hope you enjoy it, and thank you. And one more, sorry, last thing, yeah, this is my blog. If you want, you can follow me there as well. Okay, so thank you, and see you next time. Bye.